Hey, what's up everybody? Zach is back with another episode. I want to talk about some GameStop right now, pre-market, February the 4th. Let's go ahead and take a look at the option order sheets. Well, first of all, let's take a look at the chart. This is the 5-minute chart. GameStop's actually trading up about around $94 pre-market here. This is the pre-market. It's jumped up a little bit. Go ahead and take a look at yesterday. It was flat. I've noticed the sentiment is still strong among the Wall Street bettors, although it has suffered a little bit, and I see a lot of people selling off, especially with the Mark Cuban tweet about there's no shame in selling. If you guys want to read that, you can go ahead and pause and read this right here. But I see some positive sentiment about keep holding and the diamond hands and all of that good stuff. So I wanted to take a look at what's going on, and I saw some news today. If you guys didn't know, Robinhood actually increased the limit for GameStop and AMC, and here is on Robinhood's website. The GameStop has increased to 500 shares and AMC 5,500, and of course options contracts, 500 options contracts and 5,000 option contracts for AMC. So if the Wall Street bettors still have their money in Robinhood, which they might not, they might have transferred it all out because there was a whole big movement about moving the money out of Robinhood over to Webull or whatever other broker. So maybe there's not a lot left, but I have a feeling that there's still going to be a decent amount of money, no matter what the talk is. I think there's still going to be a decent amount of money left in Robinhood to buy this. So that's what I think. I think the shares opening up, the restrictions on AMC and GameStop, I think this might push the price up. It is possible. So let's take a look at this. Pre-market is jumping up a little bit. It's gapped up from around 90 and currently it's trading at 94. So that's not very much. That's what we're used to, but still. It is only about an hour until market opens right now. So less than an hour. So we'll see what happens, but I want to keep my eye on this. And actually, I had an interesting idea. Because if we look at this on the 1 hour chart, let's go ahead and go over. Let's see, where are we? It's been pretty flat since, of course it went down a little bit, but it's been pretty flat since the 3rd, which was yesterday, and the 4th. Yeah, it's been pretty flat. So the thing is, I wonder if, because it's dipped under the 180-day moving average right now. Going back down to the 5-minute chart, it's in a bearish or neutral trend on the super trend, and then of course it's under the VWAP. So looking at all of these things, my mind starts going places, thinking of what strategies can we use to, what strategies can we implement to make the most money with the least risk. Because this is just so volatile. So yesterday I was thinking about it. I almost posted on my Twitter, and guys, if you aren't following me, go ahead and do that. Link in the description to my Twitter. I was thinking about selling some puts actually on GameStop. It's a little bit risky because if we get assigned, we will be forced to buy the 100 shares actually. And it's not overall so bad. 100 shares only going to be, right now, market price $9,400. But what I'm thinking is, because yesterday was 2 days till expiration, and now it's 1 day till expiration on the February 5th contracts. So check this out. What's the chance of GameStop? Now, keep in mind, it's trading flat for the past couple of days, so I don't know if it's stabilizing or whatever. And actually, it might go up today because of the ease on the limitations from Robinhood. But let's just say, what's the chance of it going down to 75? I mean, that's a pretty decent hit. That's literally down $20-$30 there. Not $30, $20. So I mean, that's a decent amount that it would have to go down. Now if we make sure we're on puts here, go ahead and click the $75 strike and go ahead and sell that. So what's going to happen is, if you've seen my other videos about selling calls, this is actually going to be the opposite. We're selling the put. So usually selling the calls, we need to have the 100 shares in our account to secure this contract to sell the covered call. But this is going to be a cash covered put, so it's the opposite. We need to have the amount of cash if we get assigned, which is $75 per share times 100 shares. That is obviously $7,500. So in order to sell this $75 strike, sell this put, it will cost. We will need $7,500 in our account, which that's no problem for us. So once we sell the put, we're going to get a credit of estimated. They say it's estimated around $605. So let's just say $7,500 theoretically it would cost us to secure this put. So if we get a credit of $605, that's just what it says. We can set a limit order to whatever we want. And this was, keep in mind, at market close. But $605 divided by 7,500, this is around 8% that we could just make right off the bat. And the worst thing that can happen, so the risk on this is if it drops to 75, we'll get assigned. And keep in mind, this is 1 day till expiration. This is not months out. This is 1 day. This is tomorrow, at the end of tomorrow, trading day, end of Friday. This is going to be done. We're going to keep our money, and if it doesn't hit 75, all is well. We just keep the $600 credit, and that's it. Move on. But if it goes down to 75 or lower, we're going to get assigned, and we're going to be forced to buy at 75. But the cost basis would be $75 per share, and then the premium is $6.05, so minus $6.05. So our cost basis would be around 69. So it could drop to $69, and we could break even, you could say. So it's not all that bad. 60. I mean, that's a lot. That's almost 30% drop, which is possible. GameStop is volatile. It is possible. So it doesn't come without its risks. But I was just thinking about it because it's 1 day till expiration. And actually, I was looking at this yesterday, and I should have done it, but it's a little bit risky, not gonna lie, when we're talking about GameStop. Or you can do this with AMC as well. So yeah, I was looking at this yesterday, and this exact same strike, and keep in mind it was yesterday, so it was 2 days to expiration. It was going for like more than $2,000. So I mean, that's a decent amount. I'm taking a look at it today because now it's even shorter, it's less risky, so that's why they're going to pay us less. Of course, it's possible, but I would say that's unlikely because the Robinhood just increased the limit on GameStop. So you could even try an 80. 80 is going to be $800. I mean, it's getting closer to 10%. Well, sorry, it would be 10% because $80 strike price times 100 is 8,000. Get about $8, something like that. So it's closer to 10%, and you know, it might not go down. And if you guys are okay with owning 100 shares of GameStop, which probably a lot of you guys are, then this would be perfect for you guys. And this is just extra money we can put in the bank. Actually, don't put it in the bank. We don't make any money putting it in the bank. Just keep it and buy more GameStop or whatever you want to do. But so this was interesting. And if you go 8 days out, so this is a week from tomorrow. 8 days out, we could also try to sell a put here. Let's take a look at it. This is going to be more risky if you see, but the 80, if you think GameStop's not going to hit $80 by next Friday, which is 8 days. And you're going to get the premium if you sell this around $1,900 right now. So I just think that's kind of interesting, and I'm sure there's going to be some of you guys interested in doing that. But we'll see when the market opens, and we're going to see what these premiums are going for at that time, because of course it's going to change. And as a matter of fact, it's $94 right now, so it's actually going up. So I would assume these premiums might go up a little bit, but then of course you factor in the decay and whatnot. But anyways, you guys can check that out. I think it's pretty interesting. You know, vice versa, we could have looked into a call, but we'd have to buy the 100 shares first. So market prices for 100 shares is $9,400. So I mean, we could go ahead and buy the 100 shares, and then we could sell a call here. So we could sell a call around $195, let's just say. We're going to get $1,200 back in the premiums. Almost $1,200. Credit says $1,170 right now, and of course that's market close yesterday. But we could sell that, and then if it doesn't hit our strike, well, we keep the GameStop shares, and we keep this $1,200. If it does go up to $95, which, guys, is literally $94 right now, I think it's possible. Even $100, it can hit it today. I don't think it's going to the moon today. To be honest with you, I don't think it's going to hit 150, 170, but it could go up because of the Robinhood limitations increase. So overall, guys, I think it could be interesting. If you have 100 shares, do this, I would say. If you just want to make decent money and you don't mind taking this risk, which is not all that big, but of course it's GameStop. It could crash to $30. We don't know. It could also go to the moon. We don't know. But I would say today is more than likely to go up a little bit. But anyways, $100, $95. I would just do the $95 to be honest with you. That's $1,200 we're going to get back, and it's going to cost us $9,400. So we get back $1,200 in the premium. It only cost us $9,400 at market right now to enter this. So we're going to make almost 13%, plus we would sell at 95 if it hit our strike price. But check out my other videos, guys, about more information about selling the covered calls and selling covered puts and running this wheel strategy. But I think it could be interesting to run the wheel strategy right now on GameStop because these premiums are just fetching quite a lot of money. And it's the short expirations on the contracts make this a quick in and out, you could say. But also we can take a look at the AMC. This will be affected today. It's down pre-market right now, although yesterday it went up a decent amount. Let's look at the chart first. This is 1 hour chart. Let's hop over to the 5 minute because this is so volatile. So looks like we got a support going on here. This is the 180-day moving average. Should be a strong support. Yep. Don't want to go out that far. Okay. Yep, looks like a pretty strong support. Currently we're in a bearish or neutral trend on the super trend. But it could be interesting. I think maybe once this breaks the VWAP and heads north towards this super trend line, it could be interesting. Let's go ahead and check out the contracts. Now these are going to be cheaper, keep in mind. 1 day till expiration. These are up a lot, you see. 28, 21, 27, 19, 6%. Because yesterday was up 14%, keep in mind. And this is only 1 day till expiration. Now to get into this, let's go ahead and check out the puts. So to get into this, we could sell a put. See, it's like $9. So how do we figure out the strike is? Do we think it's going to go down to 7 today and tomorrow? Well, maybe. We could even do 6. Well, let's just say 6.5. So that's $23 we can get back. Let's calculate it. Is it worth it? 23 divided by our possible, the strike is $6.50. So times 100, that's $650 to secure this contract. So it would be 3.5%. It's not as good as you can see, but let's go ahead and check out the calls. This is 1 day till expiration. I mean, we're gonna make this money in 1 day, so it could be worth it. I mean, that's more than a bank can make in like 3 years in a savings account, but it has a little bit of risk. So let's say the $9, if I had 100 shares, let's see, it cost me $876 right now, and we can get $100 back. So this is more interesting for me. So 100 divided by 876, which is market, well, just changed 877. So that's 11% we would get back. And if it went up to 9 and get a sign, we're going to make a little money on the appreciation of those 100 shares. But anyways, guys, you should make your own decisions about that. I just point this out in case anybody forgot. These premiums are going for a lot of money. Instead of us buying the premiums, going long on the calls, going long on the puts, you could say. Well, let's go ahead and collect these premiums. Let other people pay us these premiums, and it's less risky. Of course, it's less money, but it's less risk. I think overall this is pretty good money with such short expirations. Usually we don't see it like this. But yeah, I wanted to go over that, and mostly, I was thinking about that yesterday because I saw those premiums. I'm like, well, this could be interesting because it's short expiration date now. We're coming up to it, so it could be interesting to make this play, guys. So let me know what you think. If you think this is too risky for you, if you think this is just as a game changer, you didn't think about it. I hope to inspire you guys to think differently. Think outside the norm for you guys. Just go long on the calls and shorting or something like that. Think a little bit differently. We're trying to change it up here. But yeah, I mean, markets look pretty flat again today. A little bit flat. S&P is up a little bit. NASDAQ is flat. I mean, hey, but we'll see what happens. Keep a look at the GameStop, guys. And remember, so follow my Twitter for the live trades. We will be trading coming up here in about 30 minutes. We're going to start the trading. I'm going to go ahead and get prepared for that. Hit the like button on YouTube. Subscribe. I'll be posting more of these videos to come. Alright guys, see you on the other side. Peace.